2023 could be a nightmare of a year for Canada and the global economy. The economy is slowing down. We know there are signs everywhere that people are starting to recess. They're starting to cut back on buying stuff, and that is a major problem for the economy. An economy that is built around consumption, which means people buying stuff. So essentially, as this economy slows down, you're going to see businesses start to cut back on their costs because they're not selling as much stuff as they once did. And you have to also remember that we are coming from a highly artificial environment of 2020 and 2021, which was when people bought a ton of stuff because their income went up due to government transfer payments. And essentially their income went up, they bought more stuff, so the businesses thought they needed to buy more stuff, they needed to hire more people, and this created a bullwhip effect which screwed up the supply chains and will eventually play out into the economy in terms of prices of stuff and things that you don't need coming back down as people pay more for things that they do need. And what this essentially means in not so many words is we are going to see mass layoffs. And in fact, we're already seeing that. We're seeing Amazon lay people off en masse, and they have took on a record amount of people over the past 2 years. So really the layoffs are just the start. They're just the tip of the iceberg. And even Jeff Bezos has come out and said, hey, you don't want to be buying stuff that you don't really need.
What I can tell you is the economy does not look great right now. Things are slowing down. You're seeing layoffs in many, many sectors of the economy. People are slowing down. Probabilities say if we're not in a recession right now, we're likely to be in one very soon. So my advice to people, whether they're small business owners or, take some risk off the table. If you were going to make a purchase, maybe slow down that purchase a little bit. Keep some dry powder on hand.
Now, I think that is really something to watch because he has built an entire business around selling people what they don't need. Things like TVs and phone cases, whatever it is, all the stuff that you don't need to live is what Amazon essentially sells you. Layoffs create a big problem for the banking system because when you have an economy that is in debt so much, both private and household, it means that when people get laid off, they start to default on their debts because basically they've got so much debt and they qualified on dual incomes usually, so they lose one income and then really they have nowhere to go. They have no place to go, and essentially they end up defaulting on their payment obligations, and that can lead to massive problems within the banking system. Now, usually this doesn't happen immediately, and it takes time to work its way into the banking system. And likely we're going to see that not only happen with households in 2023, we're going to see it happen with businesses too. We're going to see businesses that are struggling with high amounts of debt, that are really struggling to meet their payment obligations, and they are going to be forced into default exactly like households. I'm expecting that corporate bankruptcies are going to explode over next year as these businesses that are highly levered are going to get into trouble because interest rates have risen so rapidly, and they're really going to start to feel the effects of that coming into next year. The effects of the rising interest rates typically take 6 to 10 months to bleed into the economy so that people actually feel them. And that is what we're going to see, and it's going to be incredibly interesting next year to see how that affects unemployment, because it could really be a massive catalyst that people aren't really looking at or paying attention to. Recessions and layoffs don't sound like a rosy picture for 2023, but it's my opinion that it's better for me to just be honest about my outlook moving forward and help people that possibly can then prepare in advance for what is going to happen in 2023. You can have your plan B in place so that you know what you're going to do, what you're going to have to do if one of you is laid off, if you lose income and something happens, because it is the thing that you need to plan for in 2023, because I believe that a lot of people's jobs are going to be at risk. Canada's economy depends so much now on things like construction and credit consumption consumption, both of which are going to be in a really bad phase next year, because essentially construction, that's already being screwed. But moving forward, there's going to be even less activity on the construction side. And then when it comes to credit consumption, well, with credit consumption, you're going to see people defaulting. So that's not going to be good. So that's going to lead to a lot of people being laid off within the banking and insurance industry, which we will see next year, which is not typically the jobs that you have seen go over the past 10, 20 years. And that's going to be a big struggle for financial centers such as Toronto. Another thing a lot of people don't take into consideration is tightening credit and tight money. Essentially, what tight money is it's when the lender doesn't want to extend you credit anymore because of the environment that you're in. And that can be an environment where there's a lot of defaults that are happening at that time, or it can just be an environment of recession. Because of the recession and the risks associated with people losing their job, banks and institutions simply don't want to lend money. This creates massive problems in a country that literally depends on that bubble. And really, this isn't something that a lot of people like to discuss in Canada, but it is the reality. An economy has been created around the ever-expanding debt bubble, which we know eventually must and will pop. So the problem is when the banks start to cut people off on their credit, then that just makes the problem even worse. And you enter into this vicious cycle where you're a ship out in a storm and you've just got no compass, no navigation, and the storm is just getting much, much worse. Eventually, the probability is that you're going to get sunk by that storm. And the vicious circle that the banks will create is essentially you need more credit because your lifestyle is being massively impacted by the recession. You might have lost a job, etc. But the bank is actually cutting you off. They're saying, hey, we don't want you to have so much on your home equity line of credit. We don't want to give you this massive personal line of credit anymore because we're seeing rising defaults. We're seeing massive amounts of risk in household debt. So it's going to be insane for people to get their head around that in Canada, because for the past 30 years, people just haven't seen that. So that's going to be a very new thing that people are going to have to get their head around. And it's something that I've seen in England. You know, back after the GFC in England, companies and financial institutions didn't want to give you credit cards. The lending criteria to get a home loan or a credit card or a line of credit was extremely difficult. I mean, I can remember I was trying to get a personal loan to buy a vehicle, and it was just an absolute nightmare. You wouldn't believe everything that I had to give to the bank. And this was in 2013. So it's not like it was even that close to when it was. It was way after the GFC. And that's the thing about tight money. During a recession, tight money will last longer than even the recession because of the defaults and because of the unintended consequences of this massive debt bubble bursting that happens on the banking system. Eventually, in my opinion, I honestly believe that the banks will need some form of a bailout because this bubble is just so large. It's unbelievably large, in fact. And when that bailout happens, yes, they will be okay. The banks, you won't lose your deposits or anything like that, at least hopefully anyways. But the problem with that is they won't want to lend to you. They'll be dealing with so many losses, and the pain that they have will still be absolutely massive. And they won't want to lend after that for a long period of time. And for people to get their head around that, they can't. They can't understand it. And this is exactly why housing prices fell for so long in places like the United States and England. It was because of these tighter credit conditions that you didn't really see in Canada, because Canada just decided to inflate bubbles in other areas that didn't have bubbles prior to 2008 in order to move past the credit crisis of 2008. And it was unfortunate that that path was chosen. Politician after politician just has not wanted to do anything about that. Nobody wants to take any ownership for the issues that have caused. It's definitely something to say that Justin Trudeau has made the situation just about 5 times worse since his reign started in 2015. So moving forward into 2023, have your plan B. Prepare for the worst and hope for the best. That's all we can do, guys. So if you've enjoyed this video, you might like that one there. And you might also like this one there. And I will see you on the next one. Take care of yourself and please sign up for my free email list in the description and the pinned comment. Bye-bye.